Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Today we again will take a look at the New Zealand dollar just to finish our discussion of the setup that right now is developing on the daily and the weekly chart of the New Zealand dollar. Actually, because on the euro currency, guys, right now I do not see something interesting, so we still need some meaningful retracement for taking the short position there. But right now I do not see the sufficient bounce to the upside for thinking about the taking the short. It's probably it still should happen, still ahead. So on the Canadian dollar, our bearish setup has started. So as you can see, precisely at an area that we have specified when the major targets have been completed, slightly above the target of the bread and butter sell. So you can see bread and butter buy. So as you can see, the Canadian dollar is turning to the downside, and we start to move to with our bearish expectation. I mean the Canadian currency pair, not the Canadian directly. For Canadian directly, this means bullish action. So that's why probably today we will finish the discussion of the New Zealand dollar. In the weekend, guys, we will take a look at the Great British Pound, because on the cable right now is really interesting setup. It stands in progress. And in fact, it's the same that we have discussed last time. But since then, market has shown some progress and some moments that have been formed, needs to be discussed and needs to be updated. That's why the weekly research will be dedicated to the Canadian dollar. So right now on the New Zealand. So on the New Zealand dollar, guys, if you remember, we trade right now, or better to say, intend to trade this bread and butter sell that we have on the weekly chart, and we need to take the short position based on this pattern with the target that stands at 44.17. If you will take a look, if you take as the target not this low but that low, in this case it probably will be somewhere around 65 probably. Anyway, recently market has completed the double ripple sale pattern. It doesn't have the perfect shape, but still this is the double ripple sell, and in fact it has triggered it's put the foundation, put the starting point for the bread and butter pattern. So by the completing and confirming of the double ripple sell, market has started the bearish action on the daily chart, on the weekly, according to the weekly bread and butter trade. Right now, market stands in the retracement. This retracement is logical since we discussed it yesterday, and we said that market probably should turn to some upward bounce. But initially, yesterday we thought that it should be a bit higher, so not as strong as it stands right now. Still, the major level to watch for is 67.90. This is the 618 resistance of the double ripple pattern, and you know from the Judd Napoli framework that this is the invalidation point of the double ripple pattern. If market will climb above it and close above the 618, it will mean that the double ripple pattern has failed and it has turned to the double ripple failure. Other words speaking, our bearish setup will fail, or at least it will be not suitable for trading, since maybe it will work somehow, but we will not be able to trade it because our patterns will be destroyed. That's why today we should watch for this area. So market right now stands in upward retracement. Right now you can see that 3x3 holds action very nice. So you can see that market right now is standing below it, and in the 3x3 and well this price action. This is very typical for the double ripple. Very often when the double ripple has been confirmed, market shows upward bounce, and very often the 3x3 holds this upward retracement. So right now we need to see the further drop to the downside on the next week probably. So currently this will be the key level to watch for. If you'll take a look at the 4-hour time frame chart, we'll see here's, guys, our reasons for a bounce. This was completed ABCD pattern right at the fib support, and it creates the agreement support on the daily chart. That's normal bounce to the upside. But we said that probably we should watch for this confidence as the resistance where market should stop. This will be logical and very good action was for overall bearish scenario that we have. But market has passed through it. So next logical resistance stands right here, 67.91, particularly the double ripple invalidation area. And it's accompanied by this trend line. Take a look, this is the triangle trend line, as we have discussed. This market has broken through. We said either market will show the butterfly, if the Fed comments will be dovish. If it will be hawkish, the market should broken it down and will form this triangle. And that's what's happened. So that will be very nice resistance. So you can see fib level accompanied by the trend line. So market could show some kind of retesting of the broken trend line before starting move down. That's what we'll particularly will be watching for. On the hourly chart, guys, we have another supportive pattern that points on the same area. So take a look that we have this a bit goofy looking ABCD. It's a bit very skewed, but still this is the ABCD that now stands in progress. You can see it's ABC bottom. Market has hit 100%. Shows minor retracement here and it now stands in upward direction. The next target stands at 1618, 68 even, approximately. Slightly higher than this level, so this is acceptable. If market, for example, moves slightly higher, will hit the 68 even area. It's normal. Nothing really awful will be. This area will be still valid. So that's been said. Around this resistance area, we will get the agreement resistance right at the trend line. So that will be perfect area for trying to take the short position. Although this upward action and breaking through the confluence looks not really good for the bearish setup, this development has its own advantage. And this advantage stands in this area, because this area, in fact, the last area, the edge for a bearish setup. And as soon as market will reach it, we will be able to place very tight stop, because we do not need to place stop somewhere here or here, because this is invalidation point. So market either will drop lower here or it will destroy the bearish setup. No other possibilities we have here. That's why we could place the stop somewhere, for example, on the upper border of this triangle or slightly higher than this stop. As soon as market will move inside of and break this area, well, this probably will mean that setup has failed. That's why we do not need to place too far setups. This is some advantage in this currency development. So that being said, let's keep watching for New Zealand dollar. The area that we'll be watching for is 68 even probably. So market should complete this target first. Looks like here we have some kind of the butterfly that I do not trade this butterfly since it stands at the bottom, but it has the shape of the butterfly. Anyway, that scenario we'll be watching for. Watch for this resistance for a possible taking the short position. If and as soon as market will start to retrace down from this area, because if even market will break this area, at the first stage probably it will respect this area, because it will be a really significant resistance. You should move your stop to the break even. That's necessary condition to protect your position, protect your money. So we usually follow this follow this tool, moving the stops to the break even. And that's why we'll usually choose for entry point strong resistance and supports, because market, even technically, if we will be wrong, but technical response, then technical respect of the resistance will let us to protect our account. If even market later will continue to move higher. So that being said, New Zealand dollar shows right now a very clear setup. Let's keep watching and wait when the market will hit our resistance, where we'll be able to for taking the short position.